From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Good afternoon, this is the COB, all the stuff you need to know in the day of being business and markets, and we're all very chipper. It's been a nice day.
It's been an interesting day. I think we've had a few gremlins in the system, or either I've asked very pointed questions because my guest just disappeared on me.
Oh no! Well, you know, it's not about you, of course, Danny. It's just the systems, you know. It's gremlins in the system. Yeah, exactly. Anyway, it's been a good day for the market, has to be said overall. Am I right?
Yes.
Up by about 0.4% by the end of the session is the COB 200, and I think the ASX 200 is fairly similar. I know you've got that on your screen there.
Yeah, up about 33 points. So interestingly enough, it looks like we've closed at around 7,232 on the ASX 200. So I think we dropped under that 7,200 level yesterday and we bounced back up. So maybe those technicians have, I was going to say got their rulers out, but I'm sure it's something a little bit more sophisticated these days. They
still call it like a ruler. It's a little bit like a floppy disk when you save a document. You know, it's a redundant image, but still, it's the same. It's the same phrase, I guess. But no, you're right. Actually, that's one of those funny things I'll never forget. That the high just before the pandemic, 71.97. So it's a key level, perhaps for buyers, where that previous high happened to be all the way back then. But nevertheless, it seems like a good day, and it looks like we're having a few issues with that graphic as well. But we'll get you just to imagine there that the market finished high for the day. You'll have to take our word for it. But let's get to the three themes because, well, one of them, I think the day set off on a good positive note, just because there seems to be some, I guess, constructive dialogue happening in Washington at the moment when it comes to the debt ceiling.
Yeah, possibly. There was also, I think, one of the regional banks that said that had deposit inflows, which gave the regional bank index a big boost, and we all know that has been one of the most unloved sectors around. So that, and I think also too there were the Tesla AGM, an interview that Musk had yesterday, that was well received, and Nvidia's been out there with ServiceNow talking up AI and what those companies are doing. So, the market the markets generally, they have down days and they have up days at the moment, and we're caught in this trading range.
Yeah, I can vouch for that. Anyway, losing steam, that's our second theme of the day, and that's, I suppose applying just a little bit to the jobs market. We had those labour force figures for April released today, 11:30, and, unemployment rate ticked high to 3.7%. The economy shed 4,000 jobs, and we had a lot of analysis today from economists.
We did indeed.
I guess one data point doesn't make a trend. That's probably the key point, and there's still some signals there that the labour market is still pretty tight. The fact that it's the jobless rate still has a 3 in front of it is probably a testament to that. But hope springs eternal, at least for investors, because it would seem that at the margins, another rate hike has been priced out just a little bit, and equity's got a little bit of support, at least briefly, on that news.
As you say, at least briefly. It's really interesting because Rabobank are looking for 2 more 25 basis point hikes, whereas just chatting to AMP, and they're very much saying, no, we're going to, the RBA is now just going to sit on their hands. So I think still a lot of divergent views, even from a macro perspective, about, the long and lagged impacts.
Yes, exactly.
Yeah, and it really is taking time, this cycle. We seem to have been speaking about this, what seems like an eternity, even though it's a year, but everybody was expecting everything to collapse into a heap, and it just takes time. It takes time for people to change their shopping habits, their going out habits, and a lot of those mortgages have yet to roll off, which is really what the AMP is saying. We're still going to have that hit.
Yeah, and I suppose when it comes to the analysis of these situations too, you've got a lot of people like me out there that haven't actually really ever experienced a proper rate hiking cycle at all. So a lot of folks who are kind of clutching around looking at sort of historical analogues and trying to learn off wiser heads in the market, perhaps like me. Trying to sort of get a sense of, how these situations happen in real time. And like you said, really it's only been 12 months, which is actually quite a rapid interest rate hiking cycle in the context of
massively
its history.
steep.
Exactly.
500 basis points in the US. We've gone from 0 to 5%.
Very quickly.
I mean, that as a percentage is super, super steep.
Yeah.
And that was interesting. In the US, they were talking about there's quite a lot of small companies now going bankrupt. And somebody said, well, so what? They're all small. But it's kind of like the snowball, isn't it? The avalanche, that it gets bigger. And I think, that's the bears talking, saying that you are going to see that bankruptcy cycle starting in the US as well as the credit cycle. And it could be a quote that I've used quite a lot this year, Ernest Hemingway, how do you go bankrupt? Slowly at first and then quickly.
That's a good one. And absolutely. I think that's it's a really good point to make on just sort of where we are potentially in the cycle there. The US economy, I suppose, really does rely on that notion of creative destruction, doesn't it? These things tend to happen in far more acute ways than in Australia. But movers and shakers as well is our third theme for the day, and that applies to some corporate news. Maybe we'll get to that in just a moment. But we'll look across some of the areas of the market that were moving, I suppose, at a sectoral level. Tech performed really well today.
Yeah, absolutely.
NASDAQ did well last night. So we'll see if we can get to some of those key tech names up there. We are.
The index up about 2.65% I have.
Yes.
So top performer in terms of the sectors that I am looking at. And looks like Xero was not, hero. Well, it wasn't hero to zero. It was zero to hero today.
Zero to hero once again, yeah. And we'll pick up on that in just a moment's time. Also wanted to just take a quick look at the gold miners, because if there was an area of the market that did underperform, it would seem to be gold. And I dare say that it might be a combination of those. Debt ceiling talks progressing well. Again, a slight drop in the risk of a cascade of issues in the banking system in the United States. And then, of course, too, a little bit of risk on, just broadly speaking, in global equity markets off the back of all of that. So the gold miners, again, a little bit soft there today. Actually, what performed well were the big miners on the ASX.
Yep.
And would you look at that? Now, no, that's the wrong chart. Bugger. All right. But they did do really well.
I think they did. I think they were up that much.
They were, not that one though.
Oh, okay.
Said BHP was at $60 a share.
Oh.
If we were there, I think we'd be celebrating all-time highs in the ASX.
Whoops.
Not that one.
I told you those gremlins today, I swear.
They're everywhere.
They must be on
moon or something.
Must be on steroids.
Yeah. But let's get to that corporate news. Let's start with Xero, shall we? Because, the results on the surface were okay, right? They were okay, but they still posted a bigger loss than last year.
I think that was an extraordinary item.
Yeah.
There was something, I think, lurking in there.
Yeah, well, I sort of felt that, is it one of those instances where the bar ends up being so low, because it was $160 per share when the frenzy in 2021, especially for tech stocks, drove the price that high. It's been a pretty tough 18 months for the company. Obviously had a bit of a restructure at the start of this year, I think, maybe even at the end of last. But it would seem that all the bad news is out there now, and everyone's just sort of looking for a much more constructive future. And maybe these results reflect that. Yeah,
exactly. Better than feared, I think, has been the mantra for this year, and particularly for big tech in the US and other tech companies. My observations, just reading quickly through, is that the UK was better than expected. Everyone had been really worried about how they were going to do, and ditto for the US. So interestingly enough, Australia, New Zealand was a bit softer, but those overseas operations where people had been really concerned that it wouldn't grow as well actually did a bit better than expected. There's a new CEO, and she'll be obviously making her mark, but possibly, we'll have to read tomorrow and see what the brokers say, but better than feared. Yeah, and
back above $100 per share today for the first time since April 2022. So 12 months effectively, probably since the last time, that result for that period for the company. But we've had a bit of an ag theme this week as well. GrainCorp, Elders still not doing so great, I don't think, today. You double check that one perhaps, so
I would have thought at some stage that one's going to... Yes, it's up 3%. At some stage the buyers are going to come in because, as Mark Gardner said yesterday, EBIT is off 15%, but the stock price is off more than 50%. And but it has been a very bifurcated sector, hasn't it? So GrainCorp, as you said, Nufarm shooting the lights out, and then Elders, Incitec, Pivot, no love there.
Well, Nufarm's results were really solid. I mean, if you just look at sort of the numbers, the dollars and cents, a really big beat on revenues, upgraded its guidance for the future, and then subsequently lifted its dividend by 25%, which was to about 5 cents, to be fair, but really, really solid. And again, maybe it sort of brought some confidence back into the ag space, and what's that? Closed 14.1% higher, so that's a tidy little day.
Yeah,
at the
absolutely,
office.
Absolutely.
Last but not least, Aristocrat, one that actually, again, sort of flips out of the equation, I would dare say, when it comes to companies reporting. Talk about Xero airing the dirty laundry and then, maybe exceeding the low bar set for it. Aristocrat's results seemed all right on the surface of things, showed some strong progress in its North American market, but the stock was down about 3% today. Yeah,
well, I think it's run so hard after its sell-off that it had late December. So started January really down around that $30 mark, rallied really strongly, almost up, $38. Well, it is 38, so it was higher than that. Yeah. And from memory, I think Aristocrat sometimes it does sometimes what Technology One does. It runs up to the results and then a bit of profit taking comes in afterwards. Because remember, they made that acquisition, they announced that a couple of days ago, and it was really, really strong. Yeah. So a case of results in line, yawn, let's take some profits. Buy the rumour, sell the fact, hey?
Yeah. Did you see the, I don't know if you saw my note that I popped around this morning in the group chat. We have a group chat in the office as we would. Did you see the front page of their report?
Yes, it was an odd cartoon,
it was
wasn't
really
it?
Weird. I don't think I like that from a corporate comms point of view. It seemed kind of sinister. It was a kind of cartoon killer whale with a dollar coin and a sort of slightly...
they are into online gaming, or games, etc. But as I said, the strangest thing I actually heard overnight from the US, a survey I think in Montana, where people were asked if you had a choice between TikTok being banned and losing your voting rights for a year, and they said, well, we'll lose our voting rights and we'll get our information from TikTok. So
it's a win for China, people. That's a win for China.
Yeah.
So,
strange times.
Strange times. And I think Montana is the first. Was it the first state, I think, to ban TikTok, or maybe for government employees?
I'm not sure.
The essence of the story was that. But yeah, very, very strange. Kids these days, am I right? Anyway,
I don't watch TikTok.
We don't do the TikToks. I don't do the TikToks either. Okay, well, anyway, let's move on, get back on the stock-specific stuff. And, the stock of the day was Xero. We had Michael Gable from Fairmont Equities and Luke Winchester from Merriweather Capital. They spoke to Andrew Gagan about whether they'd be buyers here of Xero.
Did some research on it several weeks ago, and we thought, despite the run up in the share price, the valuation didn't look too demanding. There was scope for improvements in terms of cost cutting, and we know that the business can be quite resilient with their prices, and it's a hold. Not necessarily a buy, as I said. I'd like to just see what it does in the next few days. But if I was holding it, I'd be happy to continue holding.
Look, this is a good example of how the market's always forward-looking. This result is good, but it's also Xero management taking some medicine for some pretty poor capital allocation decisions over the last few years. It's a hold here. It's tough for me to say buy because it is still quite steep at a valuation, and you could see some profit taking around the $100 level.
Okay, so that's a double hold there for the gentleman, and I don't know, you become more interested in a company like that off the back of these results?
No, not necessarily.
Sort of think about these things?
No, I think you've got to see the longer term picture.
Yeah.
It's clearly growing very strongly.
Yeah.
And they have exhibited quality characteristics. So yeah, I think you've got to look at it in the context of more than just one result.
Yeah, of course. I mean, it's a part of it too, because we've got a few decent tech names. Nothing like the United States, obviously, but we've got a couple of decent tech names. You know, WiseTech's performed well recently. You know, you're going to put
done really well.
Done really well.
Yeah.
So, I mean, you want to put capital.
Technology One.
Technology One's another one. So you've got a few names where you could put your sort of like, I suppose, capital to work in that area of the market, perhaps in some sort of growth names. I mean, does it become a situation where you just sort of have to sort of pick of the three and just do your best judgment to sort of see where you actually put that money to work?
Depends on how you. I don't know. It really depends how someone manages their portfolios, whether they're doing more high conviction or whether or not they like, you know, a more diversified approach. But we will get Technology One next week reporting, so that'll be really interesting. I did see a very large price hike, I think, by Bell Potter up to $17 price target on that one. So that'll be really, really interesting. But we'll have to wait for WiseTech. Obviously in the August reporting season, and I think the one observation we can make from May is that very bifurcated in terms of some companies shooting the lights out, otherwise some massively disappointing, and it could be a precursor to what we are going to see in the run up to August, maybe a bit more confessions, or in the August results.
Yes, we'll have to see. But well, let's look at the leaders and laggards. Let's see what was at the top and the bottom of the table.
There we go. Nufarm up 13% and Xero. Hey, look at that. I got them almost right. Minres up 5%. Don't know what's happening there apart from the fact I think a few brokers, aren't they upgrading the lithium prices again?
Well, I saw that lithium prices rose only by the courtesy of the fact that I've been following this week because I had to write an article about it. But we actually have seen a little bit of a lift in the underlying lithium price, because we have seen that really big corrective move since the back end of last year, right, where sort of China ended the subsidies and there was that sort of sense that there was a bit of a demand driver being taken out of the market. So I mean, perhaps we're starting to see something of a rebound there. That could, well, I don't know, start to sort of reverse trends. Paladin Energy, though, a nuclear play. I don't know if we had Mark Gardner talking about the sort of fundamentals there a couple of weeks ago, but starting to see some strength and increased buying, I think, in inventories or something of that nature when it came to the uranium market, if I'm not mistaken. But we'll move on to the laggards now. And let's see what we've got there. Beach Energy. Now they were, I don't know if you saw that news.
They've got the White Sire or whatever, the project, I can never pronounce it. That it was delayed or something?
It was delayed, so basically cost and time blowout, and a lot of it, from what I understand, was actually due to a lack of labour. So that's been extended more or less, and investors, well, as you can tell, weren't too happy about that. It was one of their gas facilities, I believe. Gold Road as well. I mean, you can see a little bit of a theme there, which is this kind of gold story that we have had on the market today. GrainCorp pulling back, but there was some strength coming through the price in the last few days when it reported. You do obviously have that update too there when it comes to Beach. Anything that jumps out that we haven't?
No, you're absolutely right. It looks like it's labour shortages. So they've had to basically remove the previous targeted schedule and capital estimates. So it's so hard, some of these big projects that they have to bring on stream. And, pandemics certainly cause a lot of structural problems in labour markets. Yeah,
I suppose people knock these businesses as potentially being, I suppose you could say, something of an easy win. You just stick stuff out of the ground, but of course, the engineering that's involved in this and the planning and the organisation, it's often on a knife's edge, and low margin businesses more often than not as well. So anyway, we'll move on from that and talk now about the small caps. There we go. What the hell is that? That can't be right.
I'll just quickly check about.
What did Cecil do?
I'm just checking.
Jeez.
I swear this gremlin is really nasty today.
Sinister. It's possessed. Yeah, moving on.
Cecil was not up
3,242% today.
It was up 3.45%. Oh dear.
Yeah, no, don't check your investment portfolio, and if you're shorting the thing, don't worry, you're okay.
And Rhythm Biosciences clearly didn't have any love today, down almost 14%. And Rumble Res
down
8%.
Okay. We're losing control here. Let's look at what's coming up overnight, shall we? And put all of this out of its misery, as well as this gremlin perhaps that we have working through the system. And overnight, we do have Walmart reporting.
Sorry, my colleague's laughing outside.
Are you okay?
Sorry, yes, I'm fine. Apologies, everybody.
Walmart is reporting tonight. That'll be one to watch, of course. We've had a few major consumer companies disclosing results over the last few days to, I suppose, mixed results. And it doesn't look like that we've got that graphic up either for what's on overnight. So we're just going to pack it in there. Remember, you can catch up on all the news and interviews on your website and app. They were mostly better than what you've just received there. For the time being, though, we'll let Danny get a glass of water. I'm going to take a deep breath and have a lie down. And we're going to see you tomorrow morning.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.